here to unpack. Let's bring in Brent Thill, Jefferies tech research analyst. Brent has a buy rating on Alphabet, Microsoft, Meta, and Amazon. Brent, so you're feeling cautious about the group or particular names?
I think the group overall has had a great run. We're seeing a more cautious investor. You've seen numerous hedge funds basically bring down their exposure given this concern, as well as the long onlys right now just don't have a ton of conviction given the backdrop of some of the concern on the demand side, as well as where stocks have gone. So there's just going into earnings print. The good news is that many of these stocks have been de-risked going in. The bad news is no one really has a ton of conviction, and we've had a really great year-to-date return in a lot of these names.
Who's got the best setup in your view?
We still think Microsoft and Meta. Microsoft on the software side, given the AI platform hits, are going to start to take hold in the next 6 months. So as we've said, there's a big AI wave that's coming. There's a price uplift. This will help reaccelerate demand in their Azure business. We think they're in a great spot, and the stock is sold off from 366 down into the low 300s. So we think the setup's looking better there, and you have the certainty of these products that are coming out. Again, the Microsoft 365 Copilot coming in November, which everyone's excited about. So you have that as a backdrop of demand, and that pricing power will help Microsoft in the next several quarters. On the Meta side, the comps are really easy, and they're continuing to accelerate market share gains. The point solutions of Pins and Snap and others have been losing share to Google and Meta. So we think their consolidation play, as well as easy comps and continuation success with advertisers right now, is in a good spot.
Brent, any unifying theme across sort of the conference calls we're going to get from these companies that you will be listening to, or that we should be listening to get a sense as to what's going to be most important?
I think the most important is really just all the AI excitement. A lot of this is fluff, to be honest. It's not really revenue till 2024. So I think the single biggest question that everyone's going to be getting is, when does this turn to revenue? There's a lot of excitement. Obviously, the semi names of AMD and NVIDIA have done very well this year because you have to buy those to build the software services on top. But those services aren't fully all live. They will become live. So the number one question is, when do they come live, and what's the pricing impact to the economic model for these software companies in 24?
Brent, does that mean that the street's going to be sensitive to guidance on operating expense, or will be hungry for more cuts or layoffs?
Yeah, I think right now it's been the CapEx where every single technology company is bringing their CapEx up. Many have compared it to the telco days of investing out. Everyone's very concerned about the investments. Microsoft just last quarter had to raise their CapEx between $8 and $10 billion. So these are huge numbers. I mean, Oracle, we were there last week. They can't get these super clusters up fast enough. And, there's concern that these services aren't coming online, and there's a lot of expense. So they're all getting delayed because this is complicated. We're in a new world of AI. And again, it's not going to be a bed of roses out of the gate. It's going to take time. So I think that's the concern in short term is, are we going to have a margin overhang and no revenue in the short term? That, again, is more of a 6 to 9 month view. But again, as we go through into 24, 25, that will change and the revenue will start to come online.
Brent, we'll leave it there. Thank you. I'm sure we'll be talking to you throughout the next few weeks on tech earnings. Brent Thill.